Assalamualaikum, my name is NURHAELA SAHIRAH binti MANSUR and my matrix number is A23A1548. I will start the presentation with introduction of Sukuk market. The Sukuk market is a key pillar of Islamic finance, providing Sharia compliant certificates that represent ownership in assets rather than debt. Unlike conventional bonds, Sukuk must be asset-backed and structured on contracts such as ijarah, murabahah, mudarabah or musyarakah, ensuring compliance with Islamic principles and avoiding riba, gharar and maisir. Since the first Sukuk was issued in Malaysia in 1990, the market has expanded globally, led by Malaysia, Saudi Arabia and Indonesia. Today, Sukuk are widely used to finance infrastructure and development projects while attracting both Muslim and non-Muslim investors seeking ethical investments. Common structures include ijarah Sukuk for leased assets, murabahah Sukuk for cost plus sales, and mudarabah or musyarakah Sukuk for profit-sharing ventures. More recently, innovations such as hybrid and sustainable Sukuk highlight the growing role of Sukuk in supporting both economic growth and responsible finance.
My name is NURRUL WAHEEDA binti MOHAMMAD and my matric number is A23A1X56. So I will explain about the current industry issue in Sukuk. So for the first issue is the guaranteed payment and risk sharing. The nature of the issue is many current Sukuk structure include sponsor buyback promise or other guarantees that effectively protect investor principal or profit. So the critics argue that this violates Sharia spirit of risk sharing. The new standard explicitly prohibits any guaranteed payment mechanism. In other words, Sukuk return must come only from the underlying assets performance, not from the issuer problem. Next, for the industry trend, under Standard 62, all Sukuk ownership and payment must be generally asset-based. Investor return depend on asset return and possession transfer. Guarantees like fixed buyback price will be disallowed. Regulators worldwide are reviewing existing Sukuk to remove any implicit guarantees and ensure Sharia alignment. Next, we move to the challenge and risk. Eliminating guarantees raise practical issue. Market participants noted that a real asset transfer can incur extra costs like tax or duties and legal complexity. For example, practitioners warn that transferring property to foreign investors can be hard to enforce, and issuers worry about losing asset if value fall. So this factor could increase insurance costs or make investor worry of Sukuk with truly variable return.
Assalamualaikum warahmatullahi wabarakatuh. My name is NURUL bin HAMDAN. My number matrix A23A2409. Today I want to present about industry issue. Number 2 is challenge of fintech integration with Sharia compliant. Fintech platforms such as blockchain, AI, smart contract, digital wallets have the potential to improve operational efficiency and use onboarding, but also create conflict in terms of Sharia compliant. Next, about the issue description. Number 1 is incompatibility with Sharia principle. Automation such as smart contract and peer-to-peer lending need to be designed to comply with the prohibition of riba, gharar, and contractor philosophy like mudarabah or musyarakah. Number 2 is cybersecurity risk, which is modern technology infrastructure expose Islamic institutions to increase vulnerability from cyber attack and data privacy challenge. Lastly, licensing and regulatory weakness. The absence of a unified global guideline or institution aligning fintechs and Islamic finance present obstacle to cross-border scalability, particularly in Malaysia. Lastly, strategic mitigation. Number 1 is blockchain and AI technology leverage. Blockchain for transparent and immutable record, and AI for earning warning of risk to increase resilience and facilitate Sharia compliant. Number 2 is Sharia compliant fintechs product design. Ensure that technology such as smart contract and P2P lending are both based on Sharia principle, which is prohibition of usury, gharar, using Sharia contracts such as mudarabah and musyarakah. This avoids conflict of principle and ensure that the product is legal from an Islamic perspective.
Next, I will explain the key risks in the Sukuk market as well as how this risk can be managed. First, let's look at the main risk. The Sukuk market faces market risk where Sukuk prices may decline if global interest rates rise, making Sukuk less attractive to investors. Next is credit risk. If the underlying project or asset fails to generate enough income, issuers may default on payments. There is also liquidity risk because Sukuk are less actively traded in the secondary market compared to conventional bonds, making them harder to sell quickly. We also have operational risk, which arise from administrative errors, technology failure, or poor asset management. Finally, regulatory disparities exist because Sukuk legal framework differ across jurisdictions, creating uncertainty for investors. Now, regarding Sharia compliance, Sukuk structure must strictly avoid riba, gharar, and maisir. This means conventional risk management tools such as derivatives cannot be freely used. Continuous oversight by Sharia supervisory board is therefore essential to ensure that Sukuk structure, fund flows, and profit distribution remain fully compliant with Islamic principles. How do we mitigate this risk? One approach is to diversify Sukuk portfolio by combining different structures such as ijarah, musyarakah, and murabahah. Another is to use Sharia compliant hedging instruments such as wa'ad or tahawud contract to manage market and currency risk. Lastly, maintaining strict and ongoing Sharia supervision helps protect investors, and sustain confidence in the Sukuk market. In conclusion, Sukuk provides a Sharia-compliant alternative to conventional bonds, but it faces unique risks. By combining diversification, proper hedging, and robust Sharia oversight, this risk can be effectively managed while preserving compliance.
Assalamualaikum warahmatullahi wabarakatuh. And now I will analyze the issue using Islamic financial principle. For the first issue is guarantee payment and risk sharing. In Islamic finance, profit and loss must be shared. Guarantee payment violates this principle of risk sharing resemble riba because the capital provider receive a fixed return without bearing any risk. The second issue is challenge of fintech integration with Sharia compliant. Fintech must comply with the principle of avoiding riba or MAISARA. Therefore, an analysis is needed to ensure that algorithm and digital platform are free from this prohibited element. The third issue is key risk in the Sukuk market. Sukuk must be based on tangible asset and unit transaction. Not just that. Risks arise when the Sukuk structure fails to comply with this principle, making it resemble a conventional bond based on riba. Now I will tell the implication of these three issues based on Sharia, ethical, and governance. For the first issue, in terms of Sharia, the product is invalid. In terms of ethical, it creates an unjust agreement. In terms of governance, require a strict oversight from the Sharia committee. For the second issue, the implication of Sharia is the product require a Sharia audit. In terms of ethical, ensure transparency and fairness. For the governance, calls the creation of new standard and regulation. For the third issue, the Sharia implication is there is a risk that the Sukuk structure could be invalid. For the ethical, trust issue can arise from unclear asset disclosure. And the last, in terms of governance, poor risk management can impact that market stability.
Now, I will briefly talk about market participation and challenges in the Sukuk market. Firstly, after AAOIFI, standard number 62, guaranteed returns are no longer allowed. They reduce some investor interest, but it strengthened Sharia compliance with new structure like wakalah and hybrid Sukuk. Secondly, fintech brings both opportunities and challenges. Blockchain and AI improve transparency and compliance, while digital platform make Sukuk more accessible to retail investor. Finally, the key risk is low liquidity in the secondary market, but innovations in hedging and the rise of green and ESG Sukuk show strong potential for the future. Now, I will present market participation and challenges in the Sukuk market together with some possible solution. First, on guaranteed payment and risk sharing. After stricter rules, Sukuk really more on risk sharing. To improve this, government could give tax incentive, issues can diversify Sukuk structure, and investor education should highlight that Sukuk are ethical instrument and conventional bonds. Second, the fintech challenges. While blockchain AI bring efficiency, we need standardized global guidelines, stronger cyber security and data protection, and innovation sandbox to test Sharia compliant fintech safely. Finally, the key risk liquidity in the secondary market is still low. The solution is the develop hedging tools, strengthen digital Sukuk exchanges, diversify portfolios across sector, and ensure continued Sharia oversight to boost investor confidence.
Assalamualaikum, my name is NURUL BINTI and my matric number is 823A2036. Today, I will present about the engagement elements that we use to gather information on Sukuk. For the first sources, we refer to academic journals and research papers. This article gives us a strong theoretical foundation on Sukuk. For examples, they explain the concept of the risk management strategy and also highlighted potential innovation such as blockchains based smart Sukuk. By studying academic works, we were able to understand Sukuk from a more structured and scholarly perspective. The second is financial news. We use platforms such as the Financial Times and White and Case reports. This will help us to see the market's perspective, including investor concerns and the economic challenges that directly impact Sukuk issuance and trading. This sources was very useful because it's connecting theoretical knowledge with current real-world market development. The third source is case study of Sukuk issuance. For instance, Fitch Rating and AAOIFA case studies give us practical insights that show how regulatory change and risk consideration influence Sukuk structure and real-world practice. This helps us to connect what we read in theory with what is actually happening in the Sukuk industry. So, in conclusion, by combining academic research, financial use, and case study, we managed to get a more complex picture of Sukuk from theory to market reality to practical applications.
Next, we use industry data and report from FIM Partners, White Paper AAOIFI, Sharia Standard number 62, in the year of 2025, the Islamic economics with the topic of AAOIFI, Standard 62 on the Sukuk market, Salam Gateway on S&P Global Report on Sukuk performance, and also PIX Malaysia on Sukuk contracts and market data in Malaysia. These reports provided us with current trends, data, and innovations such as smart Sukuk and tokenization, strengthening our market-based understanding. We also use webinar online from YouTube, such as Introduction of Sukuk Bond in Malaysia, the resilience of the global Sukuk market, and understanding of Sukuk market. These videos made it easier for us to understanding Sukuk in a more visual and interactive way, especially for members who are new in the era. The sixth engagement element is internal group discussion discussion and brainstorming where knowledge is shared between group members. Internal discussion allows us to exchange views, combine ideas, and balance our finding between theories, market realities, and innovation. Last but not least, short survey or questionnaire which is not used in our project. However, it is a valuable tool in the future project about Sukuk market.
Assalamualaikum warahmatullahi wabarakatuh. My name is YASMIN and my matric number is A23A2235. So from our discussion on Sukuk, there are few key lessons we can see. First, Sukuk has shown strong product innovation. For example, the emergence of green Sukuk, Wakala Sukuk, and hybrid Sukuk. Second, it provides a Syariah compliant alternative to conventional bonds by avoiding elements like riba and garam. Third, Sukuk is proven as an effective tool for development financing because it has been widely used to fund infrastructure, renewable energy, healthcare, and even education projects. Lastly, we can see the global acceptance of Sukuk. It is no longer limited to Muslim majority country but has gained traction internationally. Looking forward, there are several directions for Sukuk. First, we can expect enhanced risk management through the development of Sharia compliant hedging and liquidity tools. Second, there will be more expansion to non-Muslim markets such as the UK and Japan, which are expected to issue more Sukuk. Third, the adoption of digital and blockchain technology will help increase transparency, reduce costs, and improve efficiency. And finally, the demand for green and sustainable Sukuk will continue to grow, especially with the global focus on ESG or environmental, social, and governance investment.